I'm with Shamil Jusuf, who's the CEO of Vodacom, on the occasion of the company's interim results. These are the 6 monthly results to the end of September 2014. Before we get into the nuts and bolts, Shamil, the impression I get looking at these results and also hearing industry chatter is that the environment in South Africa is tough, but you seem to be weathering the storm better than the competition and also laying the foundations for that to continue in the future with, for example, your CapEx programme.
Very much so, Lindsay. I think where we find ourselves is that it has been a tough environment in South Africa specifically because, look, the consumer's definitely under pressure, and so you are seeing more optimization of spend and so on. The second part is that we've been severely impacted by the mobile termination rate cut in South Africa, which cost us about $1 billion in revenue in the 6 months and about 600 million to the bottom line.
A substantial sum of money.
That is a substantial amount of money. So there was a big impact from that. But we've also, continued to invest in new growth areas, specifically in data and expanding our coverage for data, and also preparing our networks for the massive data growth that we're seeing and that we'll see into the future.
Just go back to the mobile termination rate story. So $1 billion has been wiped out from your revenue. Where did it go from a layman's point of view? Where did that $1 billion go?
Well, I'd say 75% of that went to Telkom. And in the past, Telkom had to pass that on to consumers. They don't have that requirement anymore. So effectively, I'd say it's made Telkom more profitable. Having said that, I think we all understood that mobile termination rates would come down. I think it was the speed that we were pushing back against, to be frank. But I think a proper process has been followed. And although we're taking the big impact in this year, the good news is that once we take it in this year, the future years, the impact in the future years is much smaller.
Indeed. 2.3% was the increase across the group for the period in revenue. Without the MTR and also the CapEx, what would the number have been realistically?
So your revenue number would have been 5%. So your revenue would have grown 5%, and that's just from the impact of the mobile termination rates. On the bottom line, it would have grown at about 8% if we then take out the CapEx part, which obviously doesn't impact revenue, but obviously impacts your costs.
Let's look at numbers now, and let's look at the numbers of new customers you've achieved over this period.
So we've grown customers across the group by 13.3% to 61 million customers, which we're quite pleased about. 2.5 million of those customers have come from South Africa. So very strong growth both in the South African markets and in our international markets. International now constituting 42% of our customer base.
Yes, it's increasing all the time. It's going to be 50-50 soon, isn't it? It is. So you're going to be a rand hedge stock.
Very much so, and I think it's good to have that added benefit coming from the international markets, especially when you're having tough conditions in South Africa.
What about the trends within usage? Voice, I understand, is under pressure, but data continues to soar.
So data traffic's up 70%. 75% your data traffic's up, but your data pricing is down 30%, and data revenues are growing at just over 21%. So very good overall result in data. So, really meeting the expectations that we created in terms of data. Voice pricing is down 19%, and volumes are up 22%. So you're starting to see that balance come through quite strongly. So, but it's really all premised on investment, because you've got to invest in your network to have sufficient capacity to be able to bring pricing down.
Yes, and you've done that. You spent 4.1 billion. Maybe we'll come to that later on, the nitty-gritty of that. I think I saw a number that said that data usage for each smartphone in South Africa or across the group was up something like 55%. Can that possibly be true?
Yes, very much. And you're starting to see your data traffic explode. And as we're putting smartphones into people's hands, more and more that number's growing. So across the group, data revenue up almost 26%, which is extremely strong.
Is it being constrained by the network, and that's why you're increasing your capital expenditure, the money that you're spending on base stations, etc., or is it just simply the smartphone penetration that holds it at that sort of number?
Well, I think your data growth comes from two areas where effectively you increase your footprint. So in South Africa, 3G coverage is sitting at 94%, and your coverage on 4G or LTE is sitting at 30%. So what we're doing is increasing that, and within the next 12 months, we hope to take 3G coverage to almost 100% of the population. So on the one side, you're increasing your footprint. On the other side, you're increasing the number of data users. And as you can increase the number of data users, and you do that by basically introducing more smartphones into people's hands, but on the other side, by making it more affordable for people to access data.
And speaking about affordability, your bundles have been incredibly well taken up. I think you've sold 40 million of these value bundles, and of course the competition has copied you, so that's quite flattering, I would have thought.
I think that's been a great result. It's 40 million bundles a month,
Yes.
and actually if we look at the recent months, it's up to 45 million bundles. So definitely a massive uptake in bundles, and even on data, we're sitting at about 10.5 million bundles a month now. So I'd say really great in terms of the bundle uptake. Competitors are copying it, and that just means we need to innovate and create the next level of differentiation.
It's impressive because I get the impression that Vodacom did this because of the relatively tough economic environment in South Africa. So you adapted to your conditions. And of course, this has been taken up not just by people who were under the whip a bit monetarily, but other people as well.
We've definitely seen the result, Lindsay, coming through from exactly what you're saying, creating products specifically for customers that are under pressure. So we have our power bundles, where effectively for R2 a minute you're getting 10, you're getting airtime for 4, and you're getting an hour. Really created more for what we call sachet living, and so more hand-to-mouth living, and then we have the next level up, which is Power Hour, and then our all-net bundles and so on. So there's basically a bundle for almost every customer, if you like, and it's really based on the concept of really worry-free pricing.
Every time I sit down with you, I look at the data numbers and the increase, and I think it's got to plateau at some stage. But again, looking at the the smartphone penetration, the sky's the limit for a while in the future.
Data usage is sitting at just over 51% in South Africa, 32% in international. So there's still a lot of growth left, both in the South African market and the international market. And also year on year, you're seeing the growth coming through with people starting to access more, and as they get used to data, they start to access a lot more stuff. For instance, video is still under indexing in South Africa when you compare to international markets. There's still a big growth potential to come through from that. But also streaming was under indexing, and that's why we've launched services like Deezer, where effectively you have 35 million songs that you can access and stream.
Another success story, another Vodacom success story, M-Pesa. Tell us about the period.
So, it's been really impressive from the perspective that we now have over 7 million customers using M-Pesa across our African footprint, and the relaunch having happened in South Africa about 2 months ago, and we're already seeing good traction in the South African market. So M-Pesa is now already constituting 9% of group revenue, and so becoming a meaningful part of our business as we go forward.
And if you look at a country like Tanzania, for example, you've also launched a new product, a new savings product, a financial services product, which has also had good take-up. Can you explain what that is?
So it's a new service called Empower, which basically allows you to do loans, but also have savings accounts on your through M-Pesa. And already you have a third of the banking infrastructure in the country, or the formalized banking structure taking it up. So we already have 300,000 customers using Empower, so we're quite pleased with the result.
So it has a social impact as well, because a lot of the people that you're targeting with this product can't access traditional banking. So it's changing the landscape in a social way.
Very much so, and I think the big thing is obviously M-Pesa. So M-Pesa does that, and this is a step up, if you like, because it now allows you to save as well as borrow, and I think that's really taking it to the next level, and really creating the full ecosystem, if you like. And I mean, if you look at M-Pesa as a bank today, then effectively we're the biggest bank in Tanzania, and fast becoming the biggest one in each of the countries in which we operate.
Neotel now. The last time we sat 6 months ago, Neotel was just been announced, I think it was. What's the progress been? Give us an update.
Where we are currently is that it's in front of both the Competition Commission and the regulator for approval, and we're working closely with the two authorities to try and get the approvals through. We're still hopeful that it will happen before financial year end, but I think we'd like to also encourage the two authorities to please move as quickly as possible on it, purely because the faster we can get it, the faster we're able to do fibre to the business, fibre to the home, and bring more of these services to our South African population.
Can you explain where Neotel fits in strategically, not only for Vodacom, but also for the country and also for the government?
Well, I think, Neotel's really been the second network operator, and I think it's done extremely well from the perspective that it is capital constrained. We think that we can take Neotel and effectively capitalize it properly and use it as a growth vehicle for fixed services. If you look at your penetration of let's call it DSL or fibre today, it's sitting at about 2% of the population. So I'd say there's a huge opportunity for growth, and obviously we've seen that as a growth area, as let's say mobile voice is obviously saturated, if you like. So we need to find new areas of growth, and Neotel really presents us with that opportunity. I think it also talks to really achieving the government's broadband objectives, and I think to have 50% of all households having 100 megabits per second by 2020 is quite a big ask, and I think we can play our role in helping to achieve that goal with an entity like Neotel.
Finally, capital expenditure, we've spoken about its importance for the future, keeping a good service to your existing customers, attracting new customers, also keeping ahead of the competition. How much are you going to be spending over the next few years?
So we've given guidance that we'll be spending 14 to 17% of our revenues on capital investment. I mean, in the half, it's close to 5.9 billion rand that we're spending on capital investment. And that's quite important because on the one side, it's creating a lot of jobs, and on the other side, it's increasing our infrastructure and rating our networks for data, and also taking us towards the goals that have been set in the broadband plan.
Shamil, thanks very much for your time.
Thank you, Lindsay.